Right, now that we've spoken about market flow and Japanese candlesticks, it's time to actually bring them together into processes. In this video, I'm going to be showing you how we can use the market flow aspects that we spoke about to gauge trend direction and how to accurately do it in real life scenarios for trades. So we put the base knowledge there. We spoke about all the different things that we needed to speak about. Spoke about my approach to technicals, having a refined watch list using market structure, key levels, liquidity, supply and demand, momentum, all of these things to gauge trend direction and to gauge the overall flow of the market. Now, it's all good having the knowledge. So now what we're going to do with it is bring it into a real market scenario and show you how you would actually go about using it. That's because if you've got all that knowledge, but you're using the monthly charts to gauge trend direction, and then you're using the hourly charts to find trading opportunities, well, then you're going to be doing it all wrong. What you need is to actually see it in action, to see trades formulated and the actual trend direction gauged for immediate trading opportunities. So here we go then. When I start off, I like to start off on the weekly chart. Okay, when I'm trying to work out the direction of the trend in a market. Now, the reason I start on the weekly chart is because what that's going to do is give me the opportunity to identify zones, identify areas that price is very likely to move into. For example, here on the weekly chart, I can see a very clear supply zone, right? We're going to call that 1.940. Now that right there is a very, very clear supply zone to me. And I would expect that over time, yes, it's going to take a long, long time because we're on the weekly chart, but over time, price is going to be magnetized towards this level. So in terms of actually trying to sell the market lower than where we've previously been, that's not something that I'm going to have my eyes on. Okay, I can see here we've got a clear zone right up there that we are likely to go into. Now, what I can also see from the weekly is things like this. Okay, we have a 1, 2, 3 retested resistance, which has now been taken out and is traded back above again. So this very well could have been a run for liquidity, but because we know we have this imbalance and this zone above, and also the double strength here, this 1-2 drive, if we can actually take this high out, I would then actually be confident on continuing this pair long. Okay, so that's why I like to start on the weekly, and that's what I recommend doing. It's going to give you those overall big magnetization zones and key levels to work with. Now, from this weekly chart view that we might not have got if we were looking at some scaled in timeframes, we've identified a key resistance point which has been broken through. We've also identified a big key price imbalance that comes right out of, I'll just say this now, interesting, we will talk about this a bit more, the Brexit referendum. That drop came from there. So big imbalance, very likely to go trade back through this, being such a big, hard decline without any retest back into it yet. So that is what the weekly chart is useful for, providing the overall picture. So next then, let's scale it down to the daily chart and actually view the structure a bit scaled in. So we're seeing consistent higher highs and higher lows. If we could see a push through the top of here, that could then well set us up with, retracement, find a new higher low, and then continue trading the market upwards. So watching this market, there we go. We managed to take out that high, and that daily chart, well, we could have found some opportunities in line with that for now. This is just gauging the trend structure. So this tells me then that the market is still strong and it's still pushing towards that area that I want to see met. So what we could actually then do is look for buys in line with the trend. Okay. Now, when things change, we can actually then look to switch our buyers for trading opportunities. Now, if we were to look at this for how it is on a daily, we can see, higher low, higher low, higher low, higher low, and then the higher low has now been taken out. So in terms of trading opportunities, and this is why it's important, we could look for shorts, right? We could look for shorts of some form. However, we know that overall the market is going to be magnetized to this level. So any shorts we take are going to be temporary, right? Potentially down towards this low, plotting a key level 1.720. So, any shorts that potentially arise underneath this level here could be viable down into that level. Now, let me just run over the picture again so that you don't get confused. We have the weekly magnetization level. We've got this resistance that we took out, okay? We have that weekly magnetization level up there. That's where we want to see price go long term. We're focusing on now the near-term price structure, higher highs, higher lows, and we can see that this higher low here was taken out. So temporary selling opportunities could very well come through. However, we know while we remain above here, we are still in that uptrend, and we do have this broken resistance, and we do have that weekly magnetization level that we really have a strong feeling that it's going to go into, because we've got a big price imbalance and a big supply zone. So that's how we're using these market flow aspects to gain ideas for trades. So let's actually see how this plays out now. So there we are. Okay, nice reactions off of that level. That would have provided us with a selling opportunity. Now, why did we sell from there? Well, quite clear. Supply zone, price imbalance. Okay, trade into that. That's going to act as a resistance. The market could come down all the way towards this level, and anywhere towards there, would provide shorting opportunities. So watching this now, it looks like now that we're trading back above, we could be ready to go up and continue this uptrend. So this would have been a great buying point, right? Why is that? Because it's a break retest of a key level and supply zone, which is now turned into a demand zone. So just using that weekly chart to get the overall big levels allows us then to scale into the lower time frames, the daily, to view the structure, the higher highs, the higher lows, and think, okay, we know long term we want to take it into this level, but in the midterm, are there going to be any other trading opportunities forming? Like, for example, when we see a higher low give way to form a lower high, a lower low, we could then identify, right, zones above. Potentially we could short from here, because we've got that overall bigger picture into there, but this is a weekly chart. From where we are, it could potentially take years to reach that target. And we are not waiting in trades for years, are we? We're trading for a day, up to a couple of weeks, potentially a month if it's a really big trade. So we can actually, use the near-term price structure to find trading opportunities without actually ever letting go of that bigger picture, so that we don't get caught up trying to sell too far versus the overall upside trend. So there you go. So far, I've showed you from using the market flow aspects of imbalances of supply and demand, of the overall market structure, higher highs, higher lows. We've seen then confirmed upside. We've seen a little change in structure here, which gave us a sell trade. So from the opportunities that we've literally presented live in front of you here, there's 600 and so pips downside potential from this retest, focusing on a near-term market structure. And then when we saw the breach of this high and retest, there's another 700 pips of upside, 800 pips of upside potential, because we know that overall we want to target that 1.9400 level. Okay, so we come back down, trade into that low finally. Now, after we saw, what's this? Higher low, higher high, now lower high. This could have provided, once again, another selling opportunity back down towards that original intended target. And then what's this? Trade back above, providing new buy opportunities to go higher. Okay, so you can see that using the overall picture, using the market structure, we can get so many different trades within the overall price movements. Now, we're in an uptrend overall. That's confirmed because we are failing to ever breach these previous lows. But while actually trading, we do get short opportunity, we do get long opportunity, we do get more short opportunity and more long opportunity all the way throughout this price action. We have our magnetization level, market flow imbalances, supply and demand, key levels dragging us towards this level, and so many other opportunities presenting themselves within that price action. So this is how we're going to be using then market flow to actually gauge trend direction. We want to focus on big key levels, overall trend direction, and magnetization points that price is likely to move to. And then what we want to do from there is actually scale in and focus on the near-term market structure, on the daily charts and the 4-hour charts. What trends are currently forming? What opportunities can we find within them? Using the daily charts, great, because you can then use the 4-hour and the 1-hour to find good pinpoint entries and catch some amazing trades. Now, you've seen here just multiple opportunities where we can use the higher lows, lower lows structure to actually find multiple trades versus that overall weekly trend, but still in line with the shorter term daily 4-hour trends. So there we go. The magnetization point was tapped and an amazing short opportunity came out of that. Now, that's not to say it's going to stop there, but that is using these key levels, the supply and demand, the precision that we got into that zone on the weekly there, the precision we got right in there, and the big selling opportunity that came out of it. It's just absolutely brilliant to see. So hopefully this video has helped you a bit. The overall checklist is essentially going to be start out on the weekly, Identify your magnetization points and any key levels that may have previously been broken. For example, when we were looking at the market here, where we started, what does that really show us? Okay. A naked chart like that does not really show us that much. However, if we can focus on some of the key levels, supply and demand, magnetization, imbalances, so starting out weekly chart, clear imbalance there, right? Clear supply zone, 1.94. Clear as day. We can also then see key level, 1.76. Resistance, 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 taken out, getting taken out for the second time. So we can see that there's strength in this market pushing over this level, potentially ready to drive us towards that magnetization point. So anything that happens then between here and there can be used to our advantage, knowing that we want to buy into that point, but we can, of course, as we're on the weekly, use the dailies, the 4 hours, etc., to find intraday, intra-week possibilities, shorter term possibilities to actually capitalize in the markets while we wait for our overall movement to complete. So that is the idea of using market flow to identify the overall direction of the trend and to identify the near-term trading opportunities that are going to form in line with shorter-term trends as well. So hopefully that has been useful. That is just the first step in crafting processes, is identifying the key areas in the market where that we expect price to move to, and actually then finding the trading opportunities in line with that. So in the next video, we'll talk about actually identifying zones in the real market scenarios. Now, this is how you identify the trend. It all comes down to that market structure, higher highs, higher lows, how they react to one another. And hopefully when we speak about the zones, I will be showing you how to identify supply and demand, liquidity, and imbalances within the market in line with the trend as we've just spoken about, so that you can find trading opportunities a little bit better. So thanks for watching, and I'll see you in the next video.